Welcome to ShortView Trading. This is your morning market hit for Friday, 15th of May. What matters today for traders? Well, it was a better day for the bulls yesterday with the main US equity indices closing up on the session. The S&P and the Nasdaq up just over 1% on the day. With that happening despite the fact that they opened the session lower and were weaker earlier on in the day. But actually, if you dig beneath the surface, the price action isn't that impressive other than in the headline indices and particularly the tech element within that. And there are three key areas we wanted to focus on this morning in terms of price action. Firstly, if you look at the fixed income space, govies and credit, price action has been poor in recent weeks. Indeed, the Fed started buying US high yield this week, having announced that earlier in April, and US high yield saw a modest widening of spreads yesterday and nothing impressive at all this week. Elsewhere, if you look at US 10-year bond yields, they've been basically flat in recent weeks at low levels, not signaling any cyclical pickup in the global economy. And leveraged loan prices, for example, are also pretty flat and weakened yesterday. Secondly, in terms of price action, if you look within the US equity market, beyond the headline S&P and Nasdaq indices, you'll see a number of cyclical indicators like the Russell 2000, the Nasdaq banks, and the Dow Jones transports, both standalone and relative to the S&P, all look sickly with poor price action. And then thirdly, beyond the US, looking more globally, the global equity market has clearly got poor price action, whilst in Europe, key indices closed lower yesterday and the price action there looks poor. So from a price action perspective, an awful lot of things are not confirming what you see in headline tech in the US, and they're questioning the durability of this rally. Indeed, many of them are poised at key levels and look ready to break lower. It's interesting to note in that respect, if you look at the momentum of European and US sectors, momentum's rolled over sharply in recent days and is trending lower. In front of you now, you can see the European sector momentum model. Clearly, sector momentum is now to the downside. Added to that, there are really four key reasons to remain on the short side of this market. Firstly, as you saw, and as we highlighted in recent days, we've had some key day reversals. These are generally pretty good technical indicators to mark a change of trend. Over and above that, we've had short-term sell signals, as we've been highlighting in recent days. Whilst those models have moved lower from sell signals, they're still there or thereabouts or neutral. And once you've triggered a sell, you want to run that with a moving stop loss until you get onto buy signals. And third is the price action we mentioned earlier in many key parts of the global financial markets. And then finally also our medium-term indicators, which are now starting to generate sell as well. So short-term is a 1 to 2 week model. Our medium-term is backing that up on a 1 to 2 month time frame. Those models are starting to get back on to sell. So for those four key reasons, it looks to us as if momentum's rolling over. As I say, we're poised at key levels. These are key trading sessions today, Monday and Tuesday. It should become clear whether or not we're breaking lower. From a very big picture point of view, it's interesting to note, if you look at the S&P 500 over the last 2 or 3 years, these sort of levels that we've been in recent trading sessions have been very significant resistance levels. So 2930, 2950, 3000 on the S&P 500 has acted as resistance several times in the last 2 years. And only once did we break meaningfully above that at the start of this year when we made our all-time high. So there may well be a head and shoulders pattern forming in the S&P 500. And we've seen resistance at that 2930, 2950 range in the last couple of weeks. For full details on how we're playing this market, please see today's Daily Rag, available to subscribers and on the website. So what are we watching today? Well, lots of bits and pieces of US macro data coming out, as well as Eurozone first quarter GDP. In terms of the US, retail sales will be fascinating for the month of April. There's some industrial production and manufacturing production data as well, added to which we have JOLTS and Michigan consumer sentiment first estimate, all of which will be watched closely for insights into how the global economy and the US economy did in April. Elsewhere, we have some earnings from the US in terms of continued first quarter earnings releases, including Expedia and Carnival Cruise Line, two companies that are really quite interesting with respect to this pandemic-induced global slowdown. So that's it from us. That's your morning market hit for Friday, 15th of May. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Twitter, and or Facebook. Thank you. Stay safe. Trade well.